Hello, welcome back to Core Finance. I'm Matt Brown. It gives me, as ever, great pleasure to introduce back onto the show Mike van Dulken, who is Head of Research at Accendo Markets. Thank you for coming onto the show.
Thank you.
Last one of the year. We're going to look at a few things, starting off with the FTSE and then a couple of stocks. So as we come into year end, we've had a bit of an uplift on the FTSE.
We've had a Santa rally.
Is it a Santa rally? It's pretty strong. 200 points though.
I mean, as the years have gone by, we've tended to look at it earlier and earlier, seeing it as a self-fulfilling thing. But actually this year, beginning of December would have been a great call. But, you know, some are saying, no, officially it still is the last 2 weeks of December, which is equally as true because of that lift-off last Friday. So for the moment, we're, 50 points shy of record highs, which they weren't November, they're actually all the way back in June. We remain the odd ones out, just failing to stay there while the US pushes on and the Dow remains so close. But I still see potential for us to get there, as Conor was saying earlier. The UK should, in theory, still piggyback any US tax reform. So next week could quite easily see a move to the upside again. The Santa rally is always kind of exacerbated by thinner volumes and quiet desks, etc. So you could even see potential for a fresh high, or at least a spike through as a cursory nod on that news. So it could all be down to next Tuesday night.
We'll look forward to that. So let's focus in on a couple of stocks, starting off with Old Mutual, making the news this morning with an update. What's going on with it? I mean, it's been a bit of a interesting year, turbulent year for Old Mutual. I mean, it's systematic of a few things, that exposure to South Africa and also just the fund management space. I think they're going through a lot of it is going through a transitional period. And what does the future hold for Old Mutual?
They're looking to kind of split the business and relist one kind of half of it, which has kind of kept it pretty much sideways for 2017. It's not often we're looking at charts which are nigh on 3 years worth of data here. But there was much excitement this morning when the shares reacted so strongly to effectively what was mooted on Friday, the news. So they've had another jump higher. But as always, while we could quite easily just have looked to 2017 highs as, the shares could go back to 230, always look back a bit further. You never know what's lurking. And there you go. You've got potentially, falling highs resistance. It goes all the way back to early to mid 2015. It could scupper that a little bit earlier, and we already saw a spike there towards that 222, 223, and it fell back a bit now. Even the high of mid 2016 there, around the same area. So it always pays to look much further back. The long-term trend can often prove much stronger than the short-term one. But for the moment, it takes us back to not far off 2017 highs. I think that probably the rejig is looked at favourably. It's also been a beneficiary, I think, of a much stronger South African rand in response to what should be the outcome from the ANC Congress of a new leader, or a non-Zuma leader, if you like. Which is something that has benefited, the likes of Investec and Mondi, other big South African exposed stocks. But nice technical, strong breakout there. Whether the momentum remains, it would be a tricky one. It would pay to see where it closes today. If it makes a meaningful breach of that resistance, fine. If it closes below, it means we take that thicker red line across to the close of today and say the resistance is still in place. And
you already intimated the fact of low volume, so if you see a positive story come out, you can expect a greater move than you would necessarily see in kind of normal.
When there's less volume
conditions.
On the order book, the bid and the offer spread can be that bit wider. It can mean that, as we say, the bid and the offer, it's a demonstration of desperation to own or desperation to get rid of a stock. So the prices people are willing to pay or accept can be higher or even lower than the market might be when there's bit deeper volume in the order book.
Worth noting if trading over the next week or so. And let's have a look at Land Securities, bullish reversal. There's been some fairly positive news, certainly on the corporate front, in the commercial sector in the UK. A bit of M&A going on, so that's got to be positive. from a technical point of view, where can land securities potentially go from here?
I mean, from here, I think there's just as much potential for a fall. I think that's around 14% upside to 2017 highs. It seems like a long way to go, but you know, it's fallen from what 130 all the way back to 900. So there were signs in November when we had that double bottom, which completed with the breakout to around 960. That must be. And then the pullback found that rising support, and then a powerful move, which must have been on the back of the M&A I think we talked about last time with Hammerson and Into, which gave rise to the break beyond the ceiling of that channel. It dates all the way back to end of May. So that's a good sign. As always, the breakout's one thing. Can it hold the breakout is another? Thankfully it did. You see that long lower wick 3 days ago, which failed to go back below that, breached ceiling at 970, and then a gap up, which implies fresh bullishness and appetite for the stock. I guess the next hurdle really is 995, which was the high in October, and maybe the call round 1,000 pence. But for the moment, I think to get out of that channel is a big statement for the bulls to make. You know, they're technically winning the argument there versus the bears. Whether it's fortuitous timing with the end of the year, after a bit of M&A remains to be seen. But let's face it, despite an uncertain economic backdrop and Brexit and all that, we've not seen the mass exodus of companies, or it's always seemed to have calmed down as we've got more and more positive and clarity regarding the situation. I think recently there was a report saying now that really the number of bankers that might leave the city is just in a few thousand, which is nothing.
I mean, we're seeing kind of rental space and take-up of occupancy. It's certainly in the city of London. It is at 13-year highs, I think.
Yeah, it's positive deal making.
So it's all positive. We've got cranes still up in the city. So
yeah, normally that's a bad sign when they're up, but they've been up for a long time. Normally it's a sign of that peak as a quick turn down. We've just not had that. I walk past several developments each and every morning, and while they do take a long time to be finished. I mean, they're all ploughing on. There's no sign of work grinding to a halt. We're getting positive news from several sector of purchases of their properties going through at decent prices. I think marginally above net asset value from the middle of the year. I can't remember who it was this morning. I think it was St Moden, I think. So that's all good news. It adds to a positive bearing on the sector as a whole. So I think there could be life in this breakout yet. It could be the sign of a very strong reversal. I think if you look at British Land, which is probably its best peer, it's already back trading March highs and those of last October. So whether Land Security's got a bit of catch up to do, if so, 14% upside there.
Well, maybe one for the wish list for 2018. On that note, Mike, thank you very much for joining us this year.
See you next year.